As my clients are negotiating with sellers on purchasing a home, a very, very common topic of discussion by the realtors is how fast can you close? There are many sellers who are in a rush and want to close quick on a home. So today we're going to talk about how fast can you really close on a traditional mortgage. My name's Miles Pitcher. I'm the owner of Superior Lending. I've been in the business 23 plus years. So just a few notes. We're talking about traditional mortgages today. FHA, VA, USDA, conventional loans, jumbo loans. There are other types of loans out there that operate under their own set of rules. We're not talking about those today. We're talking about the standard loans. And those also give the clients the very best interest rates. We're going to be looking at a purchase transaction, very similar to refinance, but there's a note about refinances that we'll share with you at the end. We're also going to assume that during this underwriting process, we won't have any appraisal issues. We won't have any inspection issues on the home. We won't have any title issues, or if our client's self-employed, we won't have any issues on their self-employment. We're just assuming that things will go smooth there. And it also assumes that the lender is going to be fast. All right, so a few tips. Number one, and this goes for all transactions, get your info and your documents to your lender very, very early so that they can review them and tell you what they are missing. This will speed up the process tremendously. Be responsive when they ask for things down the road, because underwriters will always ask for a few more documents. It just seems to be always be that way. Don't change your jobs. Keep making your payments on time. All right, so this is the loan process kind of really simplified. And this, as you go through it, application, disclosures, documentation, appraisal, underwriting, approval, clear close, and then closed and funded. Those are simplified steps. As it says in there, there are disclosures that are required. And these disclosures, because of something called TRID, which is TILA RESPA integrated disclosures, they have certain timeframes that are required. And so those are what create the time restrictions on closing super fast. So for example, after you meet with the lender and you give them enough information, you're under contract on the home, they have to provide to you within 3 days a loan estimate. I'll put a video up here on how to read a loan estimate so you can check that out. So there's a time restriction that are required on the loan estimate. As you're going through underwriting, you may have your rate locked in. You may have information changed, like homeowners insurance changing, or property taxes, or an HOA transfer fee showing up. So then there's a redisclosure of that loan estimate. And the key here is that that loan estimate must be disclosed 4 business days before closing. And business days are classified as days that the lender is open and operating. So if they're open on Saturday, that counts as a business day, but that's not very common. So we're typically talking Monday through Friday, and we also have to exclude holidays. Then here's the last big one is the closing disclosure. We're disclosing this typically electronically to our clients. That's another 3 days in there in the process that you have to have the closing disclosure in hand before you can close. That closing disclosure can change, and it usually does. And I'll post a video here on how to read and look at closing disclosures. But check out that video and just know that there is a 3-day wait period on the disclosure, on the closing disclosure. Okay. So really the question then becomes, how fast can you close? And assuming that you have a super fast lender and you've got everything in, that's great. But the restriction will be on those disclosure time waiting periods. So the answer is 10 days. Okay. So 10 days is the fastest that you're ever going to find a lender that can close a traditional mortgage. Now, what if it's a refinance? Okay. On a refinance, what happens is you close, and then if it's a primary residence, you have to wait an additional 3 days. It's called the rescission period, where you can change your mind and back out of the loan if you want to, but you have to wait for that. So it's really 10 days to close, and then you have the 3-day rescission period, then your loan funds. So if you're doing a refinance, plan on that extra 3 days of rescission. If it's an investment property, the rescission period does not apply. If you have any questions on this or need a second opinion, here's how you can get a hold of me and my team. Thanks for watching.